ACCA Performance Management Paper. Different methods of accounting for environmental costs. Although you cannot be required to perform any calculations for this section of the syllabus, you should be able to explain briefly 4 methods that have been suggested as ways of accounting for environmental costs. A. Inflow-outflow analysis. This approach balances the quantity of resources that is input with the quantity that is output, either as production or as waste. Measuring these in physical quantities and in monetary terms forces the business to focus on environmental costs. Resources include not simply raw materials but also energy and water, or we can say, all resources. B. Flow cost accounting. This is really inflow-outflow analysis, as described in the previous point, but instead of applying simply to the business as a whole, it takes into account the organizational structure. Resources input into the business are divided into 3 categories. Material, the resources used in storing raw materials and in production. System, the resources used in, for example, storing production and quality control. Delivery and disposal, resources used in delivering to the customer and in disposing of any waste. As in inflow-outflow analysis, the aim is to reduce the quantities of resources used, which saves costs for the company and leads to increased ecological efficiency. C. Life cycle costing. This is briefly the maintenance of physical asset cost records over entire asset lives. The relevance to environmental management accountings that it is important to include environmentally driven costs, such as the costs of disposal of waste. It may be possible to design out these costs before the product is launched. D. Environmental activity-based costing. Activity-based costing is a costing method that identifies activities in an organization and assigns the cost of each activity to all products and services according to the actual consumption by each. Its application to environmental costs is that those costs that are environment-related, for example, costs related to a sewage plant, are attributed to joint environmental cost centers. As with activity-based costing, in general, this focuses more attention on these costs and potentially leads to greater efficiency and cost reduction.